car crashes, defective products, dangerous drugs, injuries, and abuse. Across the state of Alabama, the attorneys, proudly sponsored by the law firm of Hollis, Wright, are here to serve you. Your tough legal questions answered by our experts with the attorneys of Hollis, Wright.
Welcome to the attorneys. I'm Art Franklin, and we are going to be sort of your guide through this maze of tax law. So go ahead, grab a seat, sit back. We've got a lot to cover, and it's going to be real good information for you. Some other good information that you need is that number on your screen is 1-844-LAW-TALK. Our attorneys, they start taking your call right now at the beginning of the show. They'll be with us throughout the show, and they'll answer your call. It is a free and confidential call. You'll reach someone at Hollis Wright right now. Josh, we want to get into this whole idea of tax law. Brad Howell, thank you so much for being with us. This is an important topic at an important time.
Well, exactly. At an important time, right before, taxes are required to be filed. And there are a lot of things where you can make some mistakes that impact you for years to come, add interest requirements, et cetera. So part of today's show, I think Brad is talking a little bit about the importance of proper filing, and then if you find yourself in a jam, what to do and how to fix those things. Just doing some research in preparation for your show, it's clear that the IRS plays a significant role in a lot of people's lives.
Absolutely.
I mean, I know you see that.
Yeah, and especially any sort of changes that you have in your life, whether you have a kid, whether you get married, whether you open or close a retirement account, there's so many things that have tax implications. And like you had indicated, it being a maze, that's an absolutely great metaphor because it's something that you do need help with navigating a lot of times. And you want to make sure that you're aware of any deadlines that apply to you because, like you had mentioned, you're going to get into a world of interest and penalties if you don't timely take care of some of these issues.
So Brad's kind of been our resident tax guy. He's been on the show multiple times, does such a good job with this, and we refer a lot of tax-related issues over to Brad. Talk to me just generally about kind of your practice and how you guys got into this area of the law, because obviously not everybody does tax law. Certainly we don't. We send folks to you. Tell me a little bit about the firm and how you got into this.
Certainly. So what we primarily do is what's known as tax controversy work or tax debt resolution. And our role there is to assist if you have been reached out by the IRS or Department of Revenue, they've reached out to you regarding an audit or maybe an assessment. So we can get in on the early stages of assisting with representation during an audit or after an assessment has been entered if you need assistance with determining how to appeal that. Or at the end of the day, let's say you agree with the amount that's owed or you've appealed it and you've been unsuccessful and there is a balance that needs to be resolved. We walk you through the different options that the IRS and state offer in relation to taking care of those balances.
And is part of the benefit of hiring someone for tax resolution or tax debt resolution that you have the ability to do some level of negotiation with the IRS to try and reduce those amounts owed?
Absolutely. I mean, there are options that the IRS offers, including penalty abatement or an offer in compromise, which is where you can settle for less than what's owed. But those have very strict rules that have to be followed and certain citations to the Internal Revenue Manual that need to be made. So certainly we tell people that if you have the time and the capacity to learn the thousands of references in the Internal Revenue Manual and the thousands of pages of tax law, you can successfully navigate some of those on your own, but it's highly advised that you get a tax professional to assist.
What Brad will tell you is that generally, unfortunately, people are coming to him after something's gone wrong related to taxes, and he's trying to unwind that and fix it. That's not always a great place to be as a lawyer, but that's just part of the business itself.
And along those lines, they're coming to you before something has gone wrong. Every year there seems to be a number of new changes to tax laws. What are some of the new changes this year?
So some of the changes that people are still adjusting to are related to things that have gone on since the pandemic. An example of this is that in 2021, or for tax year 2021, people were receiving the child tax credit in an increased amount. And so specifically that had been increased to $3,600 per child that is age 5 or younger, $3,000 for children between the ages of 6 and 18. However, since that time, that has now reverted back to the original numbers where it is only $2,000 per child and they have to be under the age of 17. They've also adjusted the refundable amount of that. So in 2021, due to the pandemic, the entire child tax credit was refundable, whereas now the only portion of it that's refundable is $1,600. So that's just one example of some of the things that have recently changed. We also have the employee retention credit. That's something that we have a deadline coming up soon that if you're wanting to claim that, if you didn't originally claim it on your payroll tax return, that you do have to do that for 2020 by April 15th of 2024 this year.
And does your firm handle that? Are you doing the EFNs?
So we don't do any filing of returns,
Okay.
and so specifically for something like the employee retention credit, that does require you to claim it on the Form 941 payroll tax return. And so we can certainly refer anyone out to an accountant if they don't currently have one, but we personally don't handle those preparation of returns.
What do you see as far as enforcement actions? I know that there are circumstances where people get in trouble with their taxes or they get behind. And the IRS instigates enforcement. The IRS brings a pretty heavy stick. I mean, they've got a lot of enforcement agents that are able to kind of manage collection. Is that fair?
Absolutely, and it's something that during the pandemic, up until earlier this year, they kind of put a little bit of a hiatus on sending out automated notices and taking those enforcement actions. But we've seen since about February of this year, they've started to pick those back up, and they have started to hire a lot more revenue agents to assist with that enforcement. So there's a lot of people, our clients included, we've seen that are getting final balance due reminders, final notices of intent to levy. So it's really something now that I think that they need to start paying attention to.
Yeah.
You know, I've seen these high-profile entertainers and athletes and things of that nature that even do jail time if they don't file properly. What types of things can be put in place to avoid that situation?
Yeah, and so for those high-profile cases, understandably, the IRS likes to kind of tout those and look at our achievements, look at these individuals who have faced, harsh penalties for evading taxes, essentially. And one thing to bear in mind about those is that they had to prove criminal intent in those cases. And for a lot of these celebrities, they're coming out and making public statements about how they don't think taxes are constitutional, they don't want to pay their taxes. And so that, coupled with the lack of filing a return or the failure to pay, is what leads to those criminal penalties normally. So my advice is, first of all, acknowledge that you have to pay taxes and make the good faith effort to do so, and don't make any public comments about the fact that you're not going to pay, you don't want to pay, it's illegal to pay.
Maybe they need a marketing director.
Exactly.
We got one at our firm. She's good too.
Exactly.
Talk a little bit about, as it relates to these enforcement actions, if you get a letter from the IRS, is it one of these deals where you can manage it on your own initially and then you get a lawyer involved, or do you recommend getting a lawyer involved quickly to the extent that it's happened? Like, kind of help us there.
Sure. So it depends on a variety of different factors. If you get a letter from the IRS that says you owe $5,000, the IRS has payment plans that literally can go upwards of 10 years, depending upon the remaining collection statute that they have. And so if you can pay that debt off over time, it's relatively easy to set that up. And certainly if you're then going to be paying an attorney, you've got to do the cost-benefit analysis of, should I just pay the taxes or pay a professional to assist me with paying the taxes? Yeah. But once you get to the larger balances, or once you start getting to more threatening action like levying a bank account or garnishing wages, then I think in order to protect your rights and to ensure that you're doing this properly and that you're getting the best resolution possible, that you want to go ahead and get a professional involved that is aware of the different, again, Internal Revenue Manual sections and Internal Revenue Code to use those to your best benefit.
I know we're getting ready to go to break here, but we see a lot of questions about, I was supposed to receive a refund and I got a letter instead from the IRS saying my refund had been intercepted. When we come back, I want to talk about that because I know that's an issue that happens quite often. People are confused by that, and it may be that they've got outstanding debts they have to pay. We'll talk about it, but let's go to commercial break first, and then we'll hit that on the second half.
We talked about this, the tax man cometh.
Yes.
It's coming real soon, and we're glad that you are with us here on Hollis, Wright, on the attorneys. There is a QR code on the set. You can see it on your screen. It's right on the right-hand side of your screen. Scan that QR code. You will get information where you can reach an attorney at Hollis Wright. You can ask a question, and you can also call the number on the screen as well. That's 1-844-LAW-TALK. Standing by right now, our attorneys for the firm. They'll answer your call. and it's free and it's confidential. We're talking about tax laws on the attorneys when we return.
I'm Josh Wright with the law firm of Hollis, Wright, a personal injury law firm, and thank you for watching The Attorneys. We hope you, a friend, or a loved one never needs legal counsel for a case. But if you do, the goal of the show is simple: to provide answers and legal counsel when you need it the most. Your call to the show is free and off air. So if you have questions specific to the show or related to other accident or injury topics, call, email, or text us. You can also follow us on Facebook, Twitter, Instagram, and YouTube, or go to hollis-wright.com and click on the Contact Us button. We know your time is valuable, so thank you for spending it with us and watching The Attorneys.
The Attorneys, proudly sponsored by the law firm of Hollis Wright, are here to serve you.
When we started the show in 2011, my goal was to do what our firm does best: help people answer questions related to real-world legal issues they have in their lives in a way that's not intimidating to talk with a lawyer. If the issue is important to you, it's equally important to us, and we're ready to talk with you at no cost.
Yeah, oftentimes people are confronting various legal issues in their lives that really run the gamut of a lot of different legal practice areas, such as bankruptcy, criminal law, civil law, such as personal injury, divorces, domestic relations. And to be able to have a show once a week that covers those practice areas and answers people's questions in those areas, that's really the main objective of the show.
We use the resources of the many lawyers at our law firm to create a plan that has a lasting impact for each person that calls or texts. And we also give back to the community at the same time. We are here to serve you, the viewer, each week on The Attorneys.
At Hollis Wright, we don't make empty promises. So here's a promise you can bank on. If you've been injured in an accident and want tough, aggressive, and relentless representation that wins a lot, you'll get it at Hollis Wright, where your result matters.
Welcome back to The Attorneys. On this edition of the show, we're talking about taxes, and throughout the show, you will find some useful information that we put up on the screen on the topic that we're talking about so that we can give you additional information, not only what we talk about here. Follow that information. It is something that is very useful for you, so make sure you do that. Also, get in contact with someone at Hollis Wright. We get on the phones right when the show starts so that we can answer your questions. An attorney is standing by. It's free, it's confidential. They're waiting to hear from you. We want to continue with this conversation, Josh, because it's so important in this tax season, I mean, even beyond this tax season, to understand tax laws.
Well, and it's also one of those circumstances is if you get yourself into a hole, you want to be able to get out of that hole. You don't want to dig a deeper hole. So, you know, this is some good, useful information on how not to dig a more deep hole if you get yourself in trouble with the IRS. When we went to break, I wanted to talk about this concept of intercepting refunds. People sometimes rely on those refunds, money coming in to them, and then that amount, and we get calls about this, my amount was intercepted or it paid off something that I don't think I owe. How do you discuss that issue and how do you handle that with your clients?
Sure. So normally the IRS or State Department of Revenue, whichever one has allowed that refund to be intercepted, they should send you a letter that gives you the identity of the entity that has intercepted that refund. And the vast majority of times what we're seeing is if your federal refund is being taken, it's either being applied to a state tax debt or it's being applied to a federally backed student loan or potentially something like past due child support. Now, what's required in those instances is that whatever entity that debt is owed to, they have to first certify to you that the debt is in default and that they're going to be taking collection action of some sort to intercept your refund. So they then notify the IRS or the state, and by law, the IRS or state has to provide that to them. If there is a question as to whether that debt is legitimate or whether it's in default, that's kind of the onus is on you to then prove that. And so you should always contact that particular creditor. So if you reach out to the IRS or the State Department of Revenue, there's not anything they can do about it because their hands are tied. So you do need to reach out to that particular creditor and make sure that the interception of that refund was proper. And then if not, you have to proceed with negotiating with them to get it returned to you.
Yeah, and that's what that's a great point. If, let's assume, it's arrearage in a child support, money owed that has not been paid, but there was a miscalculation, a mistake, which happens often, if the child support entity recognizes, hey, we should not have taken this full refund, can you negotiate with them where you get a portion back from that entity?
Absolutely,
okay.
Yeah. And so the funds would not then go back to the IRS or to the Department of Revenue. They would still be within the hands of that entity. And so they would be the one that have the responsibility to refund it to you.
Okay. I mean, you think about that, and it happens because people rely on these refunds.
Absolutely. Something else I was thinking about are those deductions. And are there common misconceptions about the kind of deductions that are out there?
Yeah, and so, I mean, if you have a debt of some sort, it may or may not be a deduction depending upon the type of debt. For something like child support, it used to be deductible. I forget the exact date now, but there was a point in time in which the IRS changed its laws as to whether alimony was taxable income to the recipient and whether alimony or child support was deductible by the individual paying it. And I believe it was sometime around 2019. Certainly, I would rely upon your accountant or rely upon your attorney to look that up and verify the exact date. But it could be deductible or income to you, or it may not, depending upon when that agreement was initially entered into. And then as far as, if you have a tax debt to the state or to the IRS, is that something that as you pay it back, it becomes deductible? Generally speaking, no, because that's something that you're obligated to pay, and under the tax laws, it's just not counted as a deduction to begin with.
Art, one of the biggest issues that we see, I do a lot of, personally do a lot of industrial accident work where people are injured through their employment setting. Independent contractors who taxes are not being taken out and they're being 1099 and they're responsible for paying their own taxes, and some of those employees may not manage those funds appropriately, spend those funds, and all of a sudden they realize, hey, look, the employer was not taking taxes out, now I owe taxes, and they get themselves into a jam. That's a common issue, isn't it?
It is, and especially because for someone who's employing an individual, it's easier for them and less of a cost to just treat you as a 1099 independent contractor, pay you the gross amount that's agreed upon, and not have to worry about maintaining payroll software companies and calculating all the taxes that are owed. Unfortunately for the employer, though, it's not really an option for them to just choose to treat you as an independent contractor. Now, when they're negotiating the way that you're working for them, they can structure it in such a way that if you are legitimately classified as an independent contractor, then that's absolutely fine. But we do see where individuals are technically employees, and some of the factors you're looking for there are, is this your only job? Are you expected to come in every day at set hours, or do you have the ability to go and take on other jobs? Do you have any cost out of pocket? Are you paying for your own tools, your supplies, or is the individual employer providing it for you? Are they giving you, kind of strict oversight and supervision? Are they training you to do the job a certain way? Or are they saying, hey, you've got a set of skills that I want you to use and just complete this task by a certain date? So all these are different factors that go into determining whether you're an employee or an independent contractor. And if you do feel that you're being treated as an independent contractor, even though you should be an employee, you should file what's known as Form SS-8 with the IRS. Provide them all the information, and they'll make a determination as to your status, and then they'll reach out to your employer as necessary.
The one additional takeaway from all of this is, to the extent that taxes are not being taken out, whether you agree or not, you can always fix that. But whether you agree or not, if taxes are not being taken out, you've got to set something aside to make sure you're able to pay your taxes down the road. Absolutely,
because even if the employer is in the wrong, the end result is that you're in possession of the money that should have been paid over.
Right. And we know that that date is coming, April 15th, and some people are trying to decide what tax preparation service they should use, are there some critical items that they should consider when making that decision?
Yeah, so the IRS releases some information about potential scams and being aware of the person you're hiring to prepare your taxes and making sure that they're legitimate. And one of the things that they ask you to look out for is if you're hiring a preparer that is basing their fee off of a percentage of your refund, that's not necessarily illegal, immoral, unethical in and of itself, but you have a lot of preparers out there that are then fraudulently putting information on the return that increases your refund, so therefore their fee is higher. So when selecting an accountant of any sort, make sure they have referrals, look them up online, see what type of reviews they have, talk to them about their fee structure, and then make sure you look at the return. Don't just sign it and trust them. If you don't understand something on the return, schedule a meeting with them and say, hey, what is this Schedule C? What does this mean? What is this Schedule A? What does this mean? If you don't understand the numbers, make sure that you do, because when you sign that return, you're signing under penalties of perjury.
Yep.
So.
Hey, I've got some. I know we're going to break. I got something you weren't expecting. I'm going to make Brad answer when we come back, given the new Supreme Court opinion in Alabama related to embryos, whether or not you can take a deduction for embryos. We're going to talk about that.
Wow. Now
We're on the other side. You didn't expect that.
You're getting serious
You weren't
now.
expecting that.
I didn't at all. Thank you guys for joining us. We're going to take a break right here, but we also want to go ahead and ask you to follow Hollis Wright on all the social media platforms out there, X, Instagram, Facebook. You can get more information. You can keep up to date throughout the week, not just on Sundays when you join us here for the show. Make sure you subscribe and follow those social media platforms as well. We'll take a break. We're talking taxes on the attorneys next when we come back.
Thank you for watching The Attorneys each Sunday night, where we come to your living room to provide free legal advice in a confidential, off-air setting. Unfortunately, with the number of calls, texts, and emails that come in during the show, we can't always get to everything. But know this, Hollis Wright is open all week long. You call us at 844-LAW-TALK and we're going to answer your question for free. Thank you for watching The Attorneys, and we look forward to seeing you and talking to you soon. Did you know we have nearly 100 5-star reviews on Google? That's because our clients like the work we do. If you've been injured in an accident, we are here to help. Give us a call for a free consultation. At Hollis Wright, your result matters.
Welcome back to The Attorneys, and we are talking taxes. This is also your last opportunity in this half hour to reach an attorney at Hollis Wright. They stand by live throughout the show. All you have to do is call 1-844-LAW-TALK, and you can reach that attorney. It's free, it's confidential, and you really teed up a good tease as we were heading to break.
Well, for anybody that has paid attention to the news in Alabama over the last 90 days to 120 days, there have been some significant changes related to when life begins and whether an embryo is a life or not, and that's become a significant issue. There's new legislation in Alabama that was adopted in 2024 related to it. So I pose the question to you, are frozen embryos potential deductions on your tax returns?
Yeah, it's an interesting question, especially because Georgia had also recently passed what they called a heartbeat rule. And as a result of that, the Georgia Department of Revenue released their guidance saying that, yes, an unborn child will be treated as a dependent for their state tax purposes. Now, here in Alabama, that ruling specifically, one thing to take note of it is, this was a fact pattern where an individual wandered into an in vitro fertilization clinic to an area and started handling these frozen embryos and ended up destroying some of them inadvertently. And the suit was brought under Alabama's Wrongful Death of a Minor Act. On its face, it just says minor child, but this particular decision has indicated that a frozen embryo counts as a minor child. There were some prior decisions related to the statute from years ago that also said that unborn children count. But again, I think the pertinent part of this is that the ruling applies really only to the Alabama wrongful death of a minor act. Now, with that being said, I mean, you now have some legal rationale out there in a court opinion that says, hey, this is a life and this is someone's child.
Yeah.
So someone could certainly take that challenge up. It would require them to claim the embryo or the unborn child on a return as a dependent. That would probably be rejected by the Alabama Department of Revenue, and you'd have to go through an appeal process until, I would imagine, it would arrive at the Alabama Supreme Court, and they would need to adjudicate that. You know, does this legal theory or does this legal opinion actually apply to this area of law as well?
Or was it just for wrongful death, right?
Correct.
I mean,
Yeah.
so maybe someone will do that. I promise. Someone will do that. Hey, talk a little bit about, obviously, we have plenty of people that watch this show that have been through a divorce, that have minor children, that are dependents that they can claim on their tax return. How does that work with reference to divorced parents who are both trying to claim a dependency?
Right, and that's something that we've seen kind of on the rise in recent years. We talked a little bit earlier about the child tax credit and the increases that occurred there in 2021. So you had a lot of individuals that were seeking to claim dependents that maybe they weren't claiming previously. In that instance, if you have two people trying to claim it for the same tax year, both the IRS and the state, what their system essentially does is for the first person to file to include the Social Security number of that dependent on their return, they typically accept the return. Unless for any other reason it's going to be audited, if it gets filed and accepted, that dependent's Social Security number is now tied to that return. Which means that if you have a second individual try to claim that same dependent, and especially with the e-filing systems, it's going to reject that return. Now, if you have a right to claim that child, unfortunately what that means then is you now have to mail in the return, which is going to delay processing a bit, but it's also going to trigger an audit of either your return or the other parent's return, and from there you're going to have to go through the process of submitting documentation to verify who can actually claim the dependent.
You know, and I think there are people that think, well, there's some person in Montgomery that's not really evaluating and monitoring my tax return. I'll just do the following and it will just work its way through the system and be fine. The reality is this is all digital now. And Social Security numbers are tied to individuals, dependency is tied. It's totally different today than it used to be even 30 years ago, I'm assuming. Right,
and I can imagine at some point in time with advances in systems and AI, you're going to have rejections of returns if, you know, maybe your income doesn't match the W-2 or 1099 that's already on file. You know, that's not something that's in place right now, but certainly I think we're going to have automated systems taking over more and more. But right now, there are certainly those systems in place that can automatically reject a return for some basic errors like that.
I know we're getting close to the end of the show, but I do want to ask this. People that willfully engage in tax fraud, there's jail time for them. I mean, in the civil courts, we don't put people in jail, right? But in this circumstance, that can happen, can it?
Absolutely. You know, so there's a long-standing legal precedent that we don't have a debtor's prison. So merely by owing, you can't go to jail. Right. But when you add that criminal intent to evade taxes, that is when jail time is a possibility. You're now adding on as well fines, criminal fines on top of the tax that's still going to be owed and the interest and penalties. So yeah, it's something that's certainly a possibility.
And I think the main point there is, if you run into a jam, if you made a mistake, if you fail to pay certain taxes, if you owe an amount, don't put your head in the sand. Go talk to someone like Brad. Come to us. We'll get you to Brad, whatever, to make sure that you protect yourself.
That's right.
Thanks for being on. Great job, by the way.
Appreciate it.
Certainly appreciate it. And Brad gave us exactly what we wanted, kind of that tax guide through the whole maze of the tax law, and that's what we promised you and that's what we gave you. So glad you could join us. Want to invite you to join us again. Make it a schedule, put an appointment down to join the attorneys next week, same time, same place, right here. We'll see you then.
Thanks for watching The Attorneys, sponsored by Hollis Wright.